Hey folks, my name is Eric Wilkinson. I'm with Pro Trader Strategies and Wolfman Options. Yes, some of you may recognize me as the Wolfman. I'm here to teach you guys some different option strategies and or trades that I put on, but it's up to you to put it into your portfolio in your own way. And remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. We got Great Britain construction PMI coming in at 48. Remember, PMI is Purchasing Managers Index. Anything below 50 is contraction. They came in at 48.6, expected to be 50.6. So one of the first times we're seeing Great Britain come in below 50. It's been probably a couple months since we've seen that, but it's not consecutive. So we need to see those in consecutive order for it to really start to look like it's a recessionary type indicator. And then we got European CPI, which is Consumer Price Index, flash estimates. That's one of their more important economic data points. It came in at 1.2, expected to be 1.4, so lower than expected. And then core CPI, stripping out some of those more volatile aspects, being food and energy, alcohol, tobacco. Take those out. We come in at 0.8%, expected to be 1%. They revised last month's number up slightly from 1.2 to 1.3, not making up for the headline number there, though. As far as I'm concerned, that's not a bad number, despite the fact that when we see these numbers come in below that estimate or less than what was expected on CPI, consumer prices, that is an inflationary number. We're not seeing that. That is a good thing at this point, as far as I'm concerned. A lot of people like to see that prices jack up because that means there's price elasticity where people are buying, creating demand for those types of products. That then drives prices higher. I don't really want to see prices start to go higher right now when the economy is in this slight flux, if you will, and a little bit sketchy, all right? So anyway, back here in the United States, we got a couple Fed members speaking, Chair Powell speaking, and Williams, who is a member of the FOMC, is also speaking today. Factory orders coming in at negative 0.8%, expected to be negative 1%, so slightly better than expected there. Though last month's number, factory orders, was revised from 1.9%, which was actually a really good number, down to 1.3. So wiping out any type of good economic data point we saw there in factory orders. So we don't want to see, we want to still see that demand for those type of products. All right. Let's move on to the overall markets. We've got crude oil starting to move a little bit higher. It came down and tested the point of control for the most time. Now, I talked about this. This was going to be a point, or actually where the most volume is, this is going to be a point where we needed to go and test. Now, we've gone down there and done that. I'm hoping that we actually start to see this market really settle down in and around these levels here. So I want crude oil, just for the economic part of it, to stay in here in these mid to lower 50s. That will help us create more demand for other things that we're seeing get pulled back on. Some of these other ancillary items that people might be purchasing rather than just oil. That will help the overall economy start to move. So if we get this oil down here and stay down here in the mid 50s, that will be actually good for the overall outlook for the economy going forward from the way I see it. All right, we've got gold futures coming off just a little bit, but the last couple of days it has been a massive rally between gold, GDX, some of the gold miners and stuff like that really starting to blast off. But you can see that once we start getting up to the value area high, this is the value area high here. So that's when markets really start getting overextended up in this area. So we're starting to see the market, especially with this type of parabolic move to the upside just to test this value area high, less acceptance up at these levels. We start seeing the equities start to rally, and we could easily see gold start to come back down. I think it should come back down at least to the 1300s, maybe even slightly lower than that, just because I think that the equities are going to start moving higher, and that'll cause people to take the money out of the asset like gold futures, where people are parking their money waiting to see what happens in the equities. So once they start seeing the equities rebounding, they're going to pull money out of gold and start allocating that back towards the equities. So that's what we could start seeing with levers and pulleys going forward. Especially, I can't imagine somebody got $50 rally on oil, or sorry, on gold futures moving from where we were to where we are now, basically looking at 1285 or something like that up to 1330. So that's about close to 1335. So that's about 50 points here or there. I'd be covering. Same thing here with the bonds. Bonds actually, interesting enough, I was looking at some Fed fund futures, and September, October are pricing in that they were going to start cutting rates. Even though the Fed is saying they're going to hold off for at least 2019, I've even heard some of them say 2020. They aren't going to fold that easily. They're not going to say that they've screwed up this early. I don't think we're going to see that Fed cut in interest rates that soon. I think that they're going to wait until at least 2020. They're going to let this meld and see how things work out. I don't think that the economy is at a point where we need to start cutting rates at this juncture. So I think they're going to let that meld a little bit more. Having said that, I do think that bonds are overdone to the upside. I've added some trades to this as well. We'll talk about it in a minute. VIX is coming off by 1.5. We're still in the teens, which is good, so there's opportunity for you to sell some premium. If we get this market to rally with the equities starting to rebound like we're seeing here in the Dow Jones Industrial Average, up about 400 points right now, massive rally to the upside, we are right back to the point of control, all right? That's going to be where we want to settle down. If we get back to this point of control, which, we're very close within, probably a sand wedge to the point of control, that will start settling us down. We should see vol. If the market starts to go up, we should see volatility going back down as we see the market start to move higher. People are going to be allocating to that. We should see volatility go down at this point. So it's time to take advantage of some premium selling strategies. All right. So NASDAQ almost completely engulfing yesterday's sell-off. We're up about 120 points right now, a little bit further, and that'll be a complete engulfing pattern. A rally above the 200-day moving average would be spectacular if you are a bull. That is going to act as resistance as we start moving higher. But anytime you start seeing a doji where you get a doji kind of with red, you get the doji set up like this, and then you get basically a green pattern that kind of engulfs that. If I can get a green one, if we get a green one that engulfs that to the upside, that is usually an indication that the market has bottomed and is starting to rebound higher. All right, so that's what we're looking for in equities. I've decided to start adding a little bit. This is a pretty bullish pattern, so we'll talk about that also when I get to my trades. All right, again, another setup in E-mini S&Ps where it looks like we came down, tested the 50 Fibonacci right here. This is the 50% retracement. We've found support on that level. We're rebounding back to the point of control. All right, that's again where we should start seeing this market settle down and volatility start to come back out of this market. Right now, we're seeing some elevated levels in the equities, especially if you look at like the SPUs, the NASDAQ. They're all above my threshold for selling premium strategies, especially for an index. So we're able to get involved in these before we start really seeing this volatility come out. You can see it's already started coming out in this day session. We've lost about 1 percentage point, but 1 percentage point in volatility equates to, in the Qs, 1% volatility is about 12 cents off of one of our trades just in one day session. So the market, even without it moving in a particular direction correctly or to our assumption, we're losing premium from that volatility contraction. That's where we want to take advantage of it, right? If you watch my webinars, you know that that's what we're looking for, and this is the type of situation we're like set up for it almost perfectly. All right, let's look at the Qs, which is the ETF for the NASDAQ, and this is the tradable product, really. I mean, you could go with the /NQ, which is the Board of Trades NASDAQ, but that is a much bigger product. So if you are trading with less than $100,000 in your account, you probably should be looking at the Qs here. All right, Qs are back to a point of control here. We've rallied up nicely. It lines up with this 38 Fibonacci right here. That being said, it's not going to act as a support and or a resistance. Okay, this is going to be a target now rather than anything else. That point of control is the bullseye for the market, and as you can see, we're right back to that point of control here, and the market should want to stay in and around, probably bounce in between these two, really, and we've talked about this, fill out this volume node and make it a much larger one. I think that that's kind of where we're going to be headed. The market, because there's a lot of people on one side that are saying that the economy is starting to retract, maybe a recessionary type thing, the Fed's overdone it. Those people are going to probably be on the sidelines a little bit longer, right? The people that are bullish are going to be fighting against that as well. So the market could easily just start settling down in and around here. We're basically outside of the earnings cycle, so not a whole lot of information to drive the equities in either direction, other than some of the data points we'll be getting out throughout the weeks. All right, so that's going to be the only thing that we have to go on is our economic data. All right, so we're back to the point of control on the Qs. We can see the equity, or we can see that the volatility, implied volatility, is coming out. It's starting to go down. We can see that start to downtick there. That's what we're looking for. That's when we start to look to sell premium. All right, we want to sell premium in this type of situation. And that's what I'm looking to do today. So with the Qs, as a matter of fact, I went in and sold the July, 156 puts in there for $1.02. So those are the, let me pull this up. We got the July 156 puts I sold. 156 puts I sold for, what was it? $1.02. All right. So sold the July 156 puts for $1 for the most part. So the 156 puts, you can see, is lining up way down here. So that's where my puts are. So I've got a lot of room to the downside. Like I said, I think we're going to at least settle down in and around this area. We'll get the theta contraction that we're looking for in this type of trade. We're looking for the theta and the vega coming out. So I'm looking for the theta contraction and the vega contraction, which is why I'm selling that premium. All right, and the fact that I think that the market is going to settle in and around between those 2 points of control. All right, TLT, it's another trade. I've got long puts on from TLT. They're basically worthless, you guys. The market's really got to come down to this level probably in order for me to even see anything. 120, actually it's going to have to come back down to the point of control. I think that's gone for any time soon. But I did go in and sell some calls in there, and I went into the July and sold the 134 calls in there for $1.02 also. So those are the July 134 calls that I sold for $1.02 as well. So selling those, the 134 calls, you can see, is way up here above that high. We've gotten this bit of a correction. I've talked about this. I think the market's way overdone. That's just too high of a move to the upside. I think we're going to have to come down and at least test the value area high for the market. You can see there's not a whole lot of participation up at these levels, really getting thin. I've talked about this. When you start seeing this market get that thin, not a lot of time spent at these areas, it means price is not being accepted, whether it's overdone to the upside. People aren't buying at these levels. They're just, in my camp for the most part, they think that it's overdone. So once people see that the buying has ebbed, they turn their hands around and they start selling. That's why they call it Turnaround Tuesday, which is today. We've got turnaround, if I can write it, turnaround Tuesday. All right, Turnaround Tuesday is today. That means you turn your hands around and start selling whatever you were buying yesterday. They were buying bonds yesterday, now they're starting to sell them. Yesterday they were selling equities, now they're buying them, right? So basically everybody's hands have flipped today. So that's what they call about turnaround Tuesday, and we're starting to see that happen with the overall markets. And with TLT, like I mentioned, I sold those 134 calls for $1.02. I still have my the June. I still have on my long June 121 and 122 puts. They are basically worthless. All right. So I'm looking for the market to correct finally. I might get a little bit of money back on those puts that I bought, but I doubt it. I'm not really, waiting for that to happen. I'm not going to hold my breath, but I am going to hold on to those 134 calls that I'm short. You can see we got high implied volatility, following my rules. It's a stock that has tight markets. We've got implied volatility that I expect to start coming out of it. That's the premium selling strategies. It's above a 30, it's greater than an IV percent of 30. So, all right, so that is when we start looking to sell premiums in something like an ETF, all right? So playing that according to my rules that we talk about in all of my daily market commentaries and in my webinars. So stay mechanical, stay with the process, and you will beat the probabilities. All kinds of P's, trying to give you a tongue twister. But that's about it. That's all I got for you guys today. Check out those trades. I think the markets are all going to start turning around and finally following through with my market assumptions. All right, that's all I got for you. If you can't take that, take it easy.